Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, Dr. Sanjeev Jha, the Managing Director and CEO of Fairfax Insurance, joins us on the program today as we take a closer look at the insurance sector in Sri Lanka. Then we have the latest from the bourse and market performance from LMD columnist Hasita Premaratna. And in our final segment, Travis Gomez, product head of Frontier Research, reviews the tourism industry's new initiatives as well as the effect of the coronavirus on visitor numbers. That's the lineup for Benchmark.
Hello and welcome to the Big Picture Business Program Benchmark. I'm Savitri Rodrigo. The insurance sector is in focus today, and we are looking at issues such as insurance penetration here in Sri Lanka, the regulatory environment and its impact on growth, as well as the role insurers play in terms of increasing awareness on climate change risks. Of course, among other topics we will be discussing today. For some answers, we turn to our guest, Dr. Sanjeev Jha, the Managing Director and CEO of Fairfax Insurance. Sanjeev, good to have you on the show. Thank you so much for joining us and shedding some light on the insurance sector. When you do look at Sri Lanka's insurance industry, what do you see? What is your assessment?
I think it's fantastic. I think where Sri Lanka is poised just now, both in terms of the economy and more specifically in terms of financial services, including insurance, I think the future is brilliant. The economy has been suppressed for many years initially because of the civil war, and then because of the political uncertainty over the last 1.5 years, and it's just waiting to grow. So that's very exciting for us, because insurance is a derived demand. When people make buildings, when they make factories, we come into play. If people are not investing, then we can't really grow. So we are excited by looking at the potential. When I look out of my window now, I see so many buildings coming up which weren't here 5 years back. So I think it's a very exciting time for us to be here, both in Sri Lanka and in the insurance sector.
So the Insurance Regulatory Commission of Sri Lanka reports that insurance penetration increased 1.3% in 2018 from 1.2 in 2017, which remains rather dismally low. However, what's your take on the sector's performance in terms of insurance penetration over the years?
So I have a slightly different view on penetration being used to gauge insurance acceptance. Penetration is a very industrial world concept. When countries have factories, when they have large asset base, there are auto manufacturers, huge factories, then insurance penetration makes sense. But Sri Lanka is not that. Sri Lanka does not have factories. Sri Lanka largely is a trading environment. It's a service environment. So we don't have factories, but we have people. Now if you look at the 22 odd million people that are in Sri Lanka, the Sri Lankans, I think most of them are insured. Whether they are insured of their tuk-tuks or the two-wheelers, or they are insured of their crop insurance. So most of the Sri Lankans are actually insured. And this penetration figure, which is really the insurance premium upon the country's gross domestic product, does not capture that properly. Now, if I compare us, Sri Lanka, with say a US or a China, now US and China have huge manufacturing bases. They have huge companies, where companies are making big factories. Sri Lanka doesn't have that. So my own view is, while penetration gives one indication of insurance acceptance, but when I look around, when I try to sell insurance, I know many Sri Lankans already have insurance, at least on the general side. I'm not an expert in life, so I won't be able to comment on that.
According to IRCSL, again, it was reported that the sector's growth declined to 10% in 2018 compared to 15.3% in 2017. Do you think, in your opinion, is the regulatory environment conducive to the growth of the industry?
My experience in the last 5 years with the regulators have been they're extremely pragmatic. They are very open to working with the industry in developing it grow. The primary focus is really the safety of the policyholder. So that remains the primary focus of any insurance regulator. That are the policyholders protected? Will the companies be strong enough? So growth is not necessarily the primary objective, But the IRCSL has played a fantastic role in balancing both. We are very excited by it. There are certain irritants that are there in the Sri Lankan industry that could be changed. For example, one of them is the role of NITF. Now, NITF, as you may be aware, is the country reinsurance, is a national re. That means as an insurance company, I have to share certain premium with NITF for every premium I write. Now, which is no problem. Many countries have that national re philosophy. The NITF also competes with us. So, which creates a bit of a dilemma, saying that what is their role? Do they want to be a national re, which is great, or do they want to be an insurance player? So, I think that clarity will help. The compulsory cession of premium that we have to give to NITF in Sri Lanka is 30%. Globally, that 30% is too high. It's globally that the compulsory cession that you give to the sovereign re, or when I'm saying re, the reinsurance company, is around 20% and keeps scaling down. From 20% brings it down to 10% and 5% as the insurance companies become stronger. Sri Lanka has remained at a 30% environment for many years now. I think that has to change. These things have to change for the companies to become stronger and become much more robust.
So Sri Lanka is among some of the nations that are most vulnerable to climate change. That is according to German Watch's Global Climate Risk Index 2020. Now, the Geneva Association points out that the insurance sector plays a critical role in enabling economic development for achieving climate change goals and targets. How can insurers play a role in terms of increasing awareness about climate change risk?
So there are a couple of areas where insurers signal that the risk of a nation or of an area is increasing. About a couple of years back, there was a huge loss because of the rivers overflowing because of the rain, and the entire Kelaniya River basin, where a lot of industries are located, was sort of inundated. That created an immense amount of insurance loss. Now, what that signaled to the industries that time was that insurance companies are suffering. We are seeing that risk of that area increasing because of climate change or because of as whatever it may be, and therefore they need to take some corrective actions, some structural actions. Structural actions happened. So small dams were created. There was a better cleaning of the river. The industrial units themselves created barriers by which, in case there was a flood, it will get minimized. So that's how the insurance company sort of signals to the industry, saying that, hey, we are seeing a risk going up of you operating in this area. If it's not addressed properly by the industry, the risk become uninsurable. Then, as insurance company, we say, sorry, we can't insure you, and which is a problem because any industrialist wants insurance. So I think that's how the insurance companies work together. What is happening on the weather is an agenda that is beyond insurance companies. We can just signal that we see a problem now, but to solve it really requires governments, requires not only the Sri Lankan government but requires the entire world to come together, and I think we are still a bit far away from reaching that consensus. But as a pure insurance company, we can just tell the world that, hey, we are seeing a higher risk here. The losses we anticipate are much more than we've done in the past, and therefore we see a problem. How do you solve that? It's really a much bigger issue.
Accenture says that 2/3 of consumers, or almost 2/3 of consumers, actually change brands because they're seeking more relevance to their products, their services, and their experiences. Are local insurers sufficiently focused on addressing their relevance to customers?
Insurance as an industry, forget Sri Lanka, insurance as a global industry hasn't been great in understanding customer needs. We've been very conservative. We are shy to take risks because even though our job is to take risks, so we've been shy. The way we operated in the past was largely a sales-driven machine. It was largely selling, which made us more lazy to really think of the consumer. I'm speaking very generally just now. So what happened is that we were more focused on the agent rather than on the consumer. And I don't think that's a great thing to do, because I think ultimately it's the consumer that is important. With recent technology changes, the role of the agent is getting a bit questionable now. The consumers are basically, what technology has done is finishing the intermediation. It's making information free. It's making the need to intermediate free. Like, you don't need to go to a travel agent now to buy a ticket. So it's happening in insurance. Once that starts happening, as insurance companies become much more consumer sensitive, and that's why you'll see. I know we are very sensitive to consumer needs, and we keep taking out new products. Some succeed, some fail, but that's fine. We keep doing a lot of research on with consumers, a lot of focus groups we keep doing just to understand what the consumer is saying. I think there's so much more we can do, but I think that change has happened from being an industry that was sales driven to being an industry that is consumer and marketing driven. I think that is happening. Some companies like us are slightly ahead of the curve. Other companies will follow.
We'll take a short commercial break, Sanjeev, and come back to the discussion after that. Coming up after the break, Dr. Sanjeev Jha talks about making insurance affordable across population segments and also the emerging technologies that are impacting the insurance sector. Stay with us.
We are a Sri Lankan bank. This is our home. That's why we are committed towards the future of this country, funding national development initiatives, because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome to Benchmark. Let's now resume our discussion on the insurance sector with Dr. Sanjeev Jha, Managing Director and CEO of Fairfirst Insurance. Sanjeev, according to Fitch Ratings, Sri Lanka's non-life insurance market is crowded and ripe for consolidation because of the price competition. How do you view the competition in the general insurance sector?
I love it, yes. So we ourselves, Fairfirst history is that we acquired two companies here. So we solved the issue of whatever Fitch was saying of overcrowded. We actually reduced two companies from the market. Competition is great. It keeps us sharp. It keeps us alive. It's all good things.
So what challenges do you foresee in actually consolidating the insurance sector in the non-life market?
I don't think there's a need to consolidate. I think the number of players is more than enough. I think what is required is that, are the companies strong enough? Are the insurance companies really strong enough? What's happening in Sri Lanka is that in the last 5 years, because of the entire regulatory changes that have happened on the way the capital has to be required, has challenged the general insurance industry more so, has challenged the general insurance industry to focus on their operating results, which has been difficult for some companies, and that's why the companies end up asking more capital from their local shareholders. Local shareholders feel reluctant to pumping that additional capital, and therefore the sales of insurance companies happen. So I think I've been here for 5 years, and 4 insurance companies have got sold, out of which 2 were we purchased. Possibly some more companies will be sold. I don't think that is really required if the companies become strong enough.
What are the fastest growing segments in the insurance industry?
Fastest is medical. I think Sri Lanka has been blessed with a fantastic medical infrastructure. Sri Lankans have been blessed by having free medical aid, but we've seen it in many parts of the world as the population becomes more sophisticated, as they become more wealthy, they start moving from the government funded schemes to the private funded schemes, and that is happening in Sri Lanka. I think individuals are looking at augmenting the government scheme with some private healthcare. So the entire healthcare space is a very rapidly moving segment. The other segment is really more or less linked to the economy. So there are areas which are very small just now, but they're growing well. Is things like the personal line insurance, what we call the personal line. So your house, I don't know whether your house is insured or not. Now it's a small thing, but as people start borrowing money to build a house, as they start living alone rather than living in a combined family, I think the sense of security becomes more, and that is a fast-growing area. Travel is big. Sri Lankans love to travel. Great for us. We sell them travel insurance. There's inbound travel that is happening. It's been unfortunate that for the last 12 to 18 months the inflow of tourism has been low, but there are a lot of potential of people who come into Sri Lanka having an insurance for them. So all these are very fast-growing areas.
A collaborative report by the International Cooperative and Mutual Insurance Federation and the Institute of Policy Studies of Sri Lanka highlights the lack of affordability as a major factor influencing minimum demand among low-income households. Are insurance actually taking adequate measures to make insurance affordable across all population segments?
I think there's been a challenge, Savitri, on providing insurance to the bottom of the pyramid segment, as it is known. And the challenge has really been in reaching out, our ability to reach out to those individuals. Now again, with technology, and we are working with this, we're working with Dialog, we're working with Mobitel here. I know one or two other insurance companies who are working with that. The mobile guys have allowed us a way to reach to the bottom of the pyramid very easily. So now we're able to sell them, and we're able to collect premium, which is on a daily basis and a weekly basis, which suddenly makes it very affordable. The challenge of the segment is not that they don't have money, but they don't have an ability to save money over a set. They don't have a fixed income coming in, and that creates a problem. So we were able to crack it. We have nearly about 1 million people under cover on this what we call the daily medical insurance, and I know one or two other insurance companies are also doing it. So I think we are keen as the insurance industry to reach out. There is a challenge of reaching out. There is a cost involved in that, but with technology, I think there's nothing. It's not insurmountable. On 18th, we are launching an agriculture insurance in Kigol for covering the spice, the farmers who grow spice, and we're working with an NGO called Oxfam for that. Again, the focus is really the more lower income farmers. Yeah, so there is an intent. It's a bit challenging to reach out to them, but there's definitely an intent.
Yes, it is interesting that Oxfam in Sri Lanka, Aetherisk and InsurTech announced their blockchain-based delivery of microinsurance to smallholder paddy field farmers. Now, according to a report by KPMG, however, the insurance sector is yet to identify IT as the center of value creation and innovation. Sanjeev, which emerging technologies are actually impacting the sector at this time?
Significantly. See, I think what's happening is that as insurance industry, we've always been data hungry. You know, the actuaries, our backbone is actuaries who work but nothing but data. So one of the big areas of technology that has happened is this entire big data. So suddenly with that is exploded. We ourselves have big data analysis here, and we are seeing amazing results for that. We are able to identify potential fraud indicators. We are saving money and therefore providing better service to consumers. There's a lot of mundane activity that happens. So there's an area of technology called robots or bots, and which basically automates the normal responses that are there. We are doing that, and we have bots now working with internally for our organizations, for our branch guys to send papers and stuff like that, and externally for the consumers to engage with. The entire ease of reaching out to an insurance company. Why should you come to my office? All of us communicate through WhatsApp and Viber. Why can't you use that for buying insurance? We're doing that. Amazing response we're getting on those things. Payment. Now payment, the banking sector has gone for absolutely a toss. Like, you don't know who's a bank now, because everyone's providing you a payment gateway and payment mechanism, which is great for a consumer. So we're doing that again. So why should we ask that pay me only by a check? If you can pay me through e-cash or whatever it is, so be it. Virtual, the entire ability to use imaging. So what we've done here, maybe you should go and visit our 13th floor office. So what we've done here is we've converted everyone's phone into our assistant. So supposing you're driving your vehicle and you have an accident and you're insured with Fair First, you call our call center. The person will ask, like, madam, do you have a smartphone? You say yes. They say, okay, can we use it to inspect your vehicle? You say yes, and they'll direct you, okay, take this photo, take that photo, and the claim is settled within minutes. So which is amazing. So these are things that is happening in Sri Lanka. We are settling claims in 4 minutes. These are global standards. These are absolutely global standards. Sri Lankan, we are settling claims in 4 minutes. When I'm saying settling, I'm saying from reporting a claim to money going to your bank, which is brilliant. We are selling insurance through WhatsApp, global, absolutely global standards. So I think again, I think the challenge really is what do you want to do with technology, and there's always a bit of a issue of technology. It's like consumer research. There's no science to it. You can't develop an ROI model and try to convince your board or something. So you have to have that ability to take a bit of risk, as long as it doesn't destroy the company. So you need to try out things. As long as you can try it out, decide, hey, this is failing, close it out quickly, and move on. So again, it goes back to your question on, are the insurance companies looking at consumer or not? As soon as we start looking at consumer, we will start innovating.
On that very optimistic note, may I ask you the final question today, and what do you envisage for the insurance sector for the rest of the year?
Tough. I think one of the things is that while you ask me to talk about the long term, I'll be very optimistic. When it becomes a bit more short term, I think it's tough for the economy just now. Till the general election happens, I think there will be a wait and watch pause. Insurance is a derived demand. We will not be able to grow till the buildings start growing, till more cars are sold. So I don't see money coming in very quickly for that growth to happen. The recent stuff with the virus is a huge dampener, because the inward tourism has gone down. Tourism is a big trade for Sri Lankans. I know many people who borrow money to drive their Uber and have their houses in Airbnb. So that's going to be impacted. So it's going to be tough. This year is going to be tough. I think the focus really will be on developing people, on making sure that we are ready, keep our powder dry for next year. But assuming the April election happens, assuming there's a good governance that comes in, assuming this entire virus scare dies out, 9 months onwards, I think will be a very, very, very positive road.
Thank you so much, Sanjeev, for joining us on Benchmark today. It's been a pleasure.
Thank you so much.
So we've been discussing the insurance sector with Dr. Sanjeev Jha, Managing Director and CEO of Fair First Insurance. On the other side, we have Anushan Selvaraja with more.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
We are a Sri Lankan bank. This is our home. That's why we are committed towards the future of this country, funding national development initiatives, because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome back to the show. I'm Anushan Selvaraja. Now we'll take a look at the stock market and its performance. And joining me is market analyst and LMD columnist Hasida Premaratna. Welcome back to the show. To start off with, how has the bourse performed so far?
So market has been negative. In fact, it has slightly moved down from where it was a month ago, and it has not been under a lot of activity as well, because there has been a lot of uncertainty both locally as well as in the global front. Which has led to investors to more get into a wait and see approach on one side. On the other side, there have been selective selling in certain sectors, which also has contributed towards the slowdown in the market.
What about the commodities market? How is that doing?
Yeah, I think if you look at the commodity, especially oil, if you start with, I think oil did see a sudden pickup when Iran and US tensions started to come in the early part of this calendar year. But then lately afterwards, when coronavirus gave signals that the global activity levels will start falling down sharply, then the oil started to come down. So at a time it went to $70 a barrel almost, and now it has come to about $55 per barrel range, which means that obviously Given the sluggishness in the Chinese economy and as a result the impact on the global economy, chances are that oil will not suddenly shoot up too much, but however around 55 to 60 range for some time before it moves to the 60 to the 65 range thereafter. But overall we don't see too much of volatility in the oil prices now, but volatility might be there, but certainly not a significant number that will probably go out of control. In the meantime, we are also seeing cotton and some of the other commodities also responding in a similar manner, where due to the possible drop in the demand due to the coronavirus and the resultant implications, we are clearly seeing a decline in the price levels as well. So overall, right now we are seeing a downward spiral in most commodities, but of course there will be a gradual pickup once we, as and when we hear more positive news about the coronavirus and how it can be eradicated, and how that impact will be kind of quantified and seen in the next few months.
Now with our market going down and all the problems faced by the world at this current point, what would be your advice to potential investors?
I think elections are coming. Coronavirus impact seems to be still keeping things uncertain. On the other side, the US side, there are many other activities that are taking place ahead of the US elections, with Trump going for a re-election. So given all of that, I think the chances of market picking up fast is very remote at this point of time. So I think it will stay at these levels with minor improvements with some volatility. So whenever there are good companies available at attractive price levels, I think it will be good opportunities for gradual accumulation for investors.
Thank you very much for joining us, Hasita.
Thank you.
That was market analyst and LMD columnist Hasita Premratna. We'll be right back after a short commercial break. Stay tuned.
We are a Sri Lankan bank. This is our home. That's why we are committed towards the future of this country, funding national development initiatives, because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome back to the show. I'm Anushan Selvaraja. Now we take a look at the tourism industry and how it is faring. So joining me is product head from Frontier Research, Travis Gomez. Welcome back to the show, Travis. Now just to start off with, how is the industry faring at this point in time? The central bank just released some numbers. Could you just walk us through that?
Yeah, so going into 2020, I think we were also anticipating that the first half would be a challenging period, given that we're coming off what happened with the Easter Sunday attacks, where a lot of the tourists who would have been planning their vacation 10-12 months ahead, they would have maybe decided to go somewhere else. So we were anyway expecting the first half to be challenging, and looking at the numbers for January, there's about a 7% drop, and this is the high season that we're getting into, so that's how it has been performing so far.
Now there are a lot of new initiatives being brought in by the new leadership at the Tourism Authority. What is your opinion on these initiatives?
I think they're sort of, more or less they're sort of like trying to continue with the what has been the policies in the past, in terms of trying to give like a very coherent message of Sri Lanka, what they are sort of offering when it comes to tourism. And I think something they have been pushing at some of the tourism conventions also has been this idea of wellness tourism, and sort of hoping that would sort of attract the more high-end sort of tourists, the ones who are looking for more experiential sort of tourism. So in that sense, I think it's good, because I think you need like some sort of coherent message to give that, to have in people's minds that, okay, this is what Sri Lanka is about.
Now the coronavirus, Travis, is having an impact across the world, not just in terms of the disease itself, but economically as well. Tourism in particular has been affected by this. Now China has also stopped sending out tourists from their country. What sort of impact would this have on our sector?
So already we are starting to see the impacts. So looking at even the January numbers, so overall it was 7% drop, but if you take the Chinese arrivals, it was about a 15% drop in that month. And what I think the aviation authorities were also saying was that they're expecting since this outbreak that on average the drop might be about 40%. So one saving grace we have is that our exposure to Chinese arrivals is a bit less compared to other East Asian countries which have been much harder hit, so our exposure is about 10%, but still, I mean, that has been the fastest growing segment within our tourism, so definitely it's going to have an impact on us. So overall, I feel that it won't be as severe as what some of the East Asian countries are going through. So for example, Thailand, they're reporting they are expecting like a 50% drop in their arrivals, and they're at a much bigger level. Same with Cambodia and Vietnam. So I mean, on one side, we might be less exposed, where some of the tourists who are coming from, say, US or Europe, they might prefer to come to like Sri Lanka, to South Asia relative to East Asia. So there is that thing, but overall it's still a negative for the segment.
Himali Fernando, the current head of the Tourism Authority, said that they have a 5-year plan where they hope to bring in 7 million tourists and over $10 billion in terms of revenue. How feasible is this?
So looking at the historical trend, I think I think achieving the arrival numbers might be possible, but the earnings has been much more difficult to achieve, because to try to attract some of those high-end tourists. So one thing is that, you know, on the infrastructure side, things are improving, and we might be able to better attract some of those MICE tourists, the people who are coming for meetings and like businesses and things like that. So with like the developments now happening with the port city, it's kind of accelerating, and you know, we are getting more of the large conference space, and the sort of the amenities in Colombo are increasing. So that might be a positive thing, but I think getting that earnings target is still going to be quite challenging. And it's also like difficult to figure out what's the correct strategy to do, because so right now they're trying to push this wellness aspect to it, but a lot of the tourists that are coming here might be looking for something different. It still might be like, you know, the beach and the sort of like the historical sites, so it's kind of difficult to figure that out. But I think giving that sort of message and, you know, always trying to be in the minds of potential tourists, I think that's the most important thing.
Thank you very much for joining us, Travis.
Thank you.
That was Product Head of Frontier Research, Travis Gomez, on the tourism industry. Thank you for watching Benchmark, and we hope to see you again next time.